Hello friends, if you have taken any of my other algorithmic trading courses, you know that I focus mostly around the equity asset class. I have courses on other asset classes as well, such as bonds and equity options, but my focus has mostly been around the equity asset class. So the question may be, why am I creating an algorithmic trading course focused at the Forex asset class? So the first answer is that a lot of you had reached out to me asking for a course on algorithmically trading Forex, but there are some other reasons as well. And one of the reasons why Forex trading should be on everyone's radar is that it is by far the largest market of any asset class in the world. So usually equity is the most popular asset class. Most of the news that you see in financial news is about the stock market going up or down. So it does get a lot of eyeballs, but the equity market is completely pale in comparison to the actual volume that Forex trading sees. So this illustration would give you a good example of how insignificant equity trading is when we look at the volumes that are involved in Forex trading. So the largest equity trading exchange is NYSE, and the daily trading volume on NYSE is close to around 22 billion. And then you can look at the trading volume of other large equity trading exchanges, 19 billion, 7 billion, and the numbers keep reducing. So even if you take the total of all the major stock exchanges, you would not even reach a figure of 200 billion. But look at this monster called Forex trading. Average daily trading volume of $6.6 trillion. So there is essentially no comparison when it comes to trading volume. Forex trading wins hands down. So if you want to get some exposure to this asset class, you have a lot of other peoples who are also doing the same. So you are not alone. You are in a pretty large company. And just like other asset classes, Forex trading also has both spot and derivative market. So in derivative market, you have Forex forward, futures, options, etc. And these are traded mostly by institutional investors. As a retail trader, there are some platforms that may allow you to trade in these derivatives, but most of the retail trading happens on the spot trading market. And the spot trading market share in this 6.6 trillion daily trading volume is close to 30%. So we are looking at a daily trading volume of $2 trillion traded in the spot Forex market. So spot Forex market is you simply selling any currency and then getting another currency in return based on the exchange rate. So spot trading is very simple, and we'll get into more details about spot trading in a bit. So this third point that I have on this slide is very important. Forex market is the largest decentralized market in the world. A lot of kids these days get really excited about Bitcoin and cryptocurrency, saying that, hey, it is a new money, there is no central exchange, it is decentralized, blah, blah, blah. But it's good to remind them that it is nothing new. We have had a very successful decentralized market for a major traded asset class for a very long time now, and that is the Forex trading market. So in Forex trading, there is no central exchange. The Forex market essentially consists of a network of interconnected hubs. And this is very important to understand. And in the next lecture video, I'll give you a better understanding of what I mean by that. But just know that unlike equity trading, where you trade on the New York Stock Exchange or the NASDAQ Exchange or the Tokyo Exchange, so you're always trading with a central exchange, a central authority. And the central authority has a lot of power. There is no such central exchange when it comes to Forex trading. So that is very important. And in the next lecture video, we'll get a better understanding of how that changes the dynamics of this asset class. But as of now, just know that this is a very important point. And this is something that makes Forex trading really unique. It has its own challenges because of this, but there are a lot of opportunities as well. So one question that you may have on the point of decentralized, is there opportunity of arbitrage? So for example, if I am trading using one Forex broker, I would see USD CAD rate as something, let's say 1.1. But since there is no centralized exchange, if I go to a different Forex broker, is it possible that I'll see a different exchange rate? And the answer is that there is possibility. Because of the decentralization, arbitrage opportunities do exist. But this market is so massive and there are so many people looking at the same thing. In all practicality, these arbitrage opportunities disappear within milliseconds. So that's something very important to understand. Although it's a decentralized market, it behaves very much like a centralized market. So if you're trading stocks using a stockbroker, and if you're trading Forex using another broker, most of the dynamics remain the same when it comes to quote prices, etc. All right, so that's something which is very important to understand. Another unique feature about the Forex market, specifically the spot trading market, is that it runs 24 hours a day, 5 days a week, Monday to Friday. And this is very different from how stock markets operate. The stock markets typically start at 9 a.m. or 8:30 a.m. or whatever time the specific stock exchange open until the time that stock exchange closes, which is somewhere in the evening. So you have 8 to 10 hour window in a day, and then Saturday, Sunday, there is no trading. So as far as trading hours are concerned, you have more trading hours and more continuity in trading when you're trading the Forex market. So in Forex trading, the market opens Monday midnight and then it closes on Friday midnight, and you can trade anytime during that 24/5 window. And the most important thing before you embark on your Forex trading journey is that the Forex trading landscape is extremely competitive. There are a lot of Forex trading day traders out there, and typically only 3 to 5% of Forex traders have been able to get success over the short to medium term. And this is very important. And this number, 3 to 5%, is slightly less than other important asset classes like equities. In equity, this number is around 7 or 8%. You can look up different research that have tried to quantify these numbers. But Forex trading, typically, this number is lower than other major trading asset classes. So that's something very important. There is a lot of knowledge out there about Forex trading basics, and it might be a good idea for you to look at one of those resources. And I've given you one resource here. It's called babypips.com. I have found that their learning resources are fairly nice and fairly interesting to read. So if you want to brush up on some of the basics about Forex trading, you may want to look at this specific resource. Alright, so I'll stop this lecture video now. This lecture video was all about giving you an overview of the Forex trading market. In the next lecture video, we'll see how Forex brokers participate in this decentralized market. So I'll see you in the next lecture video. Thanks a lot. Hello friends. In this lecture video, I will talk a bit more about the Forex trading market with the hope that after this lecture video, they will all have a better understanding of where we as retail traders fit in this decentralized market. I will also try to give you an idea about how your Forex trader helps you partake in this unique market. So before talking about this decentralized Forex trading market, let us first quickly talk about the market that we are all familiar with, which is the equity market, which is essentially driven by a central exchange. So if I have to draw the image or draw a diagram of the equity market, the center of the diagram would be a big box, and that box would be your central exchange. And pretty much all the arrows, which signify all the participants in the equity trading market, those arrows would be coming inside that particular box in the middle. So just try to visualize it. There is a big box called the central exchange, and retail traders, institutional traders, everyone is sending orders, and that central big box takes care of everything. Order matching, settlement, clearing, everything. But the game is totally different in this behemoth of a market, which you see on the right side of the slide. So this is a representation of how a decentralized Forex trading market looks. And it might look a bit overwhelming to start with, but if you look deeper, it's actually not that difficult to comprehend what's going on. We see that this is a network, and the core of the network consists of the central bank. And that's not really surprising. Central banks of different countries have the largest need to trade in the Forex market. And why is that? Because no one country produces everything that it needs. And therefore, the country is dependent on foreign trade to fulfill its requirement or keep its economy humming. So every country uses their central bank to transact with other countries. And this transaction, which is a transaction between central banks, is by far the biggest contributor of this Forex trading market. So if a country needs oil, it needs to buy it from a country that produces oil. And typically, oil transactions takes place in US dollars. So that country will first have to buy US dollars, then pay it to the country who's selling oil, and then get that transaction done. All right, so you understand that central banks are the central and the largest player in this Forex trading market. Then on the second layer sit the major banks. When I say major banks, I mean the JP Morgans and the HSBCs of the world. And these major banks transact Forex with the central banks and each other. And this trading, which is the second layer of this network, is called the interbank trading. And whenever you look up Forex rate on Google or any other major platforms, they will show you the interbank Forex rate. And therefore, if you actually go out and try to buy a different currency, you will see that you're not really getting the price that you see on Google, because that price is interbank rate. That's the Forex rate that the banks would get when they trade with each other. So obviously, when this trade comes to you, retail traders, there is some spread added to that particular quote. So we pretty much always end up paying more than the interbank rate. So now you understand the core of this network, which is consisted of the central bank and then major banks that lie just outside the central layer. And outside that layers are the participants which start becoming relevant for us as retail traders of Forex. And these are the brokers. So these brokers typically transact with major banks, and the quote that they receive are the spread added on the interbank rate. So you see this broker, it has an interface with a major bank, and the major bank is giving it some quotes, but that is not as competitive as the interbank rate. They have added some spread on top of it. And then on the periphery of this network sit the retail traders, which is us, and then we are transacting with these brokers. So think about it. It's so cool, right? So we as retail traders have an interface to this market which goes all the way to the central bank. So in essence, by trading Forex, you are indirectly trading with the central bank, which actually is pretty cool if you think about it. The whole idea is that through this complex hub-based network, retail traders are able to partake in this trading through Forex brokers, and typically the rates that we get are fairly competitive. Alright, and all this I explained to you right now pertains to the spot Forex transactions, which means there is instant clearing. For derivative Forex transactions like futures and forwards, the network more or less remains the same, but there are some subtle differences and we are not going there. This course is all about spot Forex transaction, and that is why I want you to have a fairly good understanding of how the market is for the spot Forex transactions. So as you may have figured out by now, these brokers are very important for you because this is the conduit through which you get a slice of this market. And these brokers typically offer you a sizable leverage. So that's also a significant difference from equity markets. So I'm pretty sure all of you understand leverage, but even if you don't understand it, I would spend some time explaining leverage in subsequent lecture videos because it is very important aspect of Forex trading. And that is because each Forex broker offers you significant leverage, which means even if you put $1,000 in your account, the broker allows you to trade in much larger volumes by offering you a leverage. And typically this leverage ranges from 100 to God knows what, 500, 1,000, whatever. So that essentially means that if you have got a leverage of 100:1, you can use $1,000 and trade up to 100,000 US dollars of Forex. That gives you an opportunity to magnify your profits, but then it's a double-edged sword. And if you don't know what you're doing, the leverage can actually cause complete wipeout of your deposit or your equity. So just keep that in mind. Again, I'll spend some time explaining what leverage is in subsequent lecture videos, but this is a feature which is unique to Forex brokers. They offer you much higher leverage than the brokers of other asset classes. Then there is a very important point, which is about regulation of these Forex brokers. Forex trading is not as strictly regulated as, let's say, equity or fixed income trading. And therefore, you need to be very careful when you are picking a Forex trading broker. Let me caution you at this point about a number of horror stories where people have lost their deposit due to unscrupulous Forex trading brokers. So it's very important that you spend some time and make sure that you are enrolling with a legitimate Forex trading broker. So let me give you an example of a very common horror story which I have also come across through some of my friends who actually lost their money to that scheme. So Forex trading is not legal in a number of countries. And these countries tend to be developing countries who have very strict capital controls. So again, think about it. Why a country would discourage Forex trading? So let's say you are a developing country. You have a limited pool of US dollar and you want that US dollar or you want that foreign currency to be used to buy critical resources, for example, oil or food, etc. You don't want your citizens to take that foreign reserve that a country has earned and use it for Forex trading, especially if you are a developing country. So you won't be surprised that a lot of countries do not allow Forex trading. So if you are a trader who wants to trade Forex but are located in one of such countries where Forex trading is illegal, you tend to get attracted towards these scam brokers because they will take your deposit. Nowadays, depositing money in any account is not that difficult. There are various ways, PayPal, etc., by which you can deposit money in a foreign account. But they will take your money, no questions asked. And then you can start trading and whatnot. But once you try to withdraw the money, these brokers would show their true color. They know that you are not in the same jurisdiction as them. They know that Forex trading is illegal in your country. And that is when they hit you. They seize the money, don't allow withdrawals, and then you have absolutely no legal recourse to get your money back. And this is something that has happened to a couple of my friends, so I know that this thing happens. But then there are other ways through which these brokers can scam you as well. Again, I'm not saying that all Forex trading brokers are like that. All I'm saying is that do your research. There are a number of legitimate Forex trading brokers who have been in the business for a long time, who have got very good reviews. So spend some time and ensure that the broker that you're going with is legitimate and have a strong track record. Alright, so when I was creating this course, I also had to choose a broker because the whole idea is that by the end of this course, I should be able to show you a strategy deployed on a broker's platform. So we would be using MT5, which is not a broker. So MT5 is used by a number of brokers. So I had to make a choice. And I have gone with DarwinX. And again, DarwinX is not strictly a broker, but it checked out on all my criteria. For example, being MT5 compliant, being strictly regulated, and having very limited downside for students of Forex trading. So I'll talk more about DarwinX in the next lecture video, which will make it clear why I chose it. But the whole point of this lecture video is that you understand the dynamics of Forex trading market and how important are brokers, and that you spend some time choosing which broker you want to go with. Alright, so in the next lecture video, I'll give you a background of what DarwinX is and why I have chosen DarwinX as the broker of choice for this course. So I'll see you in the next lecture video. Thanks a lot. Hello friends. As someone having some level of influence in the algorithmic trading community, I get approached a lot by vendors having products pertaining to the fintech industry or trading related products, etc. And I mostly say no to them because I know my students, most of you are beginner traders, and typically my priority is to introduce you to tools which are either free or very cheap. Because the whole idea is that right now you have started your algorithmic trading journey, and the less you spend while learning, the better it is. Once you become seasoned traders, then it's a different ball game. You can invest on expensive platform, etc. because by then the expectation is that you've already started making money out of trading. But when you are on the initial stages of your learning path, controlling the strings of your purse may be a good idea for you to stay motivated. But when DarwinX Zero approached me, I really saw a lot of value for people who may be looking to start their Forex trading journey. Because let me assure you, if you are a beginner trader and if you decide to put some deposit in pretty much any broker, chances are high that you would lose a good amount of that money when you are starting out. Because that is the nature of the Forex trading market. Beginners typically get crushed. And there are options for you to trade on an MT5 demo account. MT5 does provide it, and you can do that. But again, you have to be mindful that trading on the demo account is different from trading in the real environment. So the experience that you will get trading with a real broker is very different from the experience that you will gain from trading on a demo broker. So that is why DarwinX Zero piqued my interest, because it provides new traders with a safe environment where you can build your track record. And if you have a good track record, you actually get investor capital. So if you go to their website and access their documents, I'm going to share the link as a resources to this particular lecture video. You will see what is the current statistics, but typically 5 to 10% of Darwinx Zero subscribers receive some level of seed capital. So you actually have an option to become a fund manager if you can showcase that you are a good Forex trader and that you have the potential of generating positive alphas. So Darwinx supports MT5, and in the subsequent lecture video, I'll show you how you can link your account to Darwinx through the MT5 terminal that we will download and start working on our local machines. And through Darwinx Zero, the only downside that you have is the monthly subscription fee that you're paying. I think monthly subscription fee is around $20 or $30. I don't really recall off the top of my head right now, but it's fairly reasonable. And as my students, you will also get a coupon to enroll in Darwinx Zero, and I'll share all that when we are actually linking our accounts to Darwinx Zero. But right now, I just want to give you a heads up that with Darwinx Zero, the only thing that you're losing is your monthly subscription, and the benefit that you get is an actual trading account and the potential to build a track record and attract investor capital. A very important thing is that there are no regional restrictions. If you recall in the last lecture video, I told about how Forex trading is illegal in a number of countries. With Darwinx Zero, there is no such limitation. Even if you're in countries like India, China, Vietnam, which have very strict capital controls, you can still enroll on Darwinx Zero and trade Forex just like any other Forex trader in any other jurisdiction. Another important thing is that Darwinx Zero is regulated by both the UK and the Spanish regulators, so it's a fairly reasonably regulated entity. So the chances of Darwinx defrauding its customers is 0 to minimum. And they also have a very nice platform, and I'll share their YouTube videos link as well, where they share a wealth of information, not just about their platform, but about MT5, about some trading strategies as well. Alright, so all in all, a very decent platform. Once again, you don't have to enroll to Darwinx Zero in order to complete this course. Most of my course would be on the MT5 demo account, but if you want to graduate from MT5 demo account to an actual broker, I think Darwinx is a very good choice. And through their Darwinx Zero platform, you can subscribe to a Forex broker with very limited downside risk and a fairly significant upside potential. So just keep that in mind. In the next lecture video, I'll introduce you to MT5. Thanks a lot. Hello friends, so let me now introduce you to MT5, which is essentially the soul of this course. So the entire course is built on MT5 API. So it's very important that you understand what is MT5 or MetaTrader 5, why we are using it, and what is its significance. Alright? So MetaTrader is a web-based trading platform which has been extremely popular, borderlining legendary status with Forex traders. It has an award-winning trading platform and terminal, and Forex traders have been using it for a very, very long time now. I don't have the market share statistics of Forex trading by platform, but I won't be surprised if MetaTrader has more than 80 or 90% of the market share of the Forex trading platform. And again, I'm using the word platform, not brokers. So MetaTrader is not a broker. It is a trading platform. But then it allows Forex trading brokers to use its platform. So the brokers don't need to have their own technology team to manage the terminal and the trading platform, because that is a significant cost to pretty much any broker. So MetaTrader takes care of that. It just provides the brokers with the platforms, and they are happy to use it because it is so popular and so intuitive. And one thing that you should understand is that MT5 is the latest version of this trading platform that has been released by the mother company, MetaTrader. So before MT5, there was MT4. I don't know, but before MT4, maybe they have MT3 or whatever. But the latest version is MT5. And although this was released back in 2010, this remains their latest offering. And I'm creating a course on MT5 because MT5 is the version that supports Python API integration. So both MT4 and MT5 are available for you to download and install on your machine. If you install MT4, you won't be able to do Python API integration. It only works with MT5. And this has left a lot of MetaTraders' loyal customer base a bit unhappy because MT4 remains a very popular trading platform. If you compare MT4 to MT5, the ratio may be 70:30. Still 70% people who use MetaTrader use MT4. And that is understandable. If you have been trading for a long time, you have your entire trading system built on a platform, and then if someone offers a new platform, the transition is rarely a very happy experience. People want to stay on the platforms on which their trading systems are working. So still a lot of traders are using MT4, but the mother company MetaTrader has announced that it would end supporting MT4. So you would see in the next few years a lot of people moving into MT5. So the chances are high that your knowledge of MT5 and the Python integration is going to keep you in a very good stead in the near future. So by now you should have a fairly good understanding of the basics of the Forex trading market, the platforms that we need, the vendors that we are going to use. So all that is required now is to start implementing our trading system. So the first step in implementing our Forex trading system is to download MT5, connect MT5 to a server, preferably a broker server, but you will see in this course that I will use both MT5's demo server and actual trading server, which is hosted by Darwinex. And finally, we will use MT5 Python's API to integrate our trading algorithms and deploy our trading strategy. Alright, so from the next lecture video, we'll start executing these steps and start building our Forex trading system. So I'm really excited to embark on this journey, and I hope that this journey is going to be rewarding for all of us. See you in the next lecture video. Thanks. Hello friends. So by now we have enough background about the MT5 terminal, and we can very easily download it and do our Python API integration. But I'll do that in the next lecture video, because in this lecture video, I want to give you a bit more background about this MT5 terminal and its mother company called MetaTrader software. And I want to do that because MetaTrader is not just a terminal, but it has an entire trading ecosystem encompassed within it. So think about TradingView. It's very similar to that and more. So if I'm creating a course on MT5 Python API integration, I may as well introduce you to all these tools and forums that are available to you so that you can use them as required for your algorithmic trading systems. So this is the MT5 terminal download link, and we'll download and do all the integration in the next lecture video. But right now you can see all the options that are here. And an interesting thing that you see here is this for brokers. So I've already told you that MetaTrader is not a broker, but it's a platform. It allows brokers to license its technology and its platform so that if any user subscribe to that particular broker, they have access to the underlying MetaTrader technology and the platform, which we are going to learn in this course. So that's the good thing about it. If you know MetaTrader 5 API, you don't have to learn about individual broker-specific API, for example, FXCM or Oanda. So some brokers who have developed their own Python API, they have their separate APIs, but you don't have to worry about that if a broker is MT5 compliant, because MT5 has its own API, and if you know it, you can implement your algorithmic trading strategies on that particular broker. And now you may ask, why is MT5 so popular? Why do brokers license their expensive software? So there are a number of reasons for that. Firstly, MetaTrader was some kind of a pioneer in the field of Forex trading. When they developed this platform, the MetaTrader platform, I don't know what version they started with, but it was long time ago. And that platform took the Forex trading community by a storm. And that is because their terminal was considered extremely intuitive and ahead of time when it was first launched. In addition, they also allowed traders to perform different level of automation through scripts, through their APIs, through something that they call Expert Advisor, which is very similar to what we are going to do in this course, but it's not in a Python language, but in a different language, and I'll tell you about that in a bit. So people saw a lot of potential in this technology or in this terminal, and that's why it became really popular. And as of now, it has the largest market share of technology providers to various Forex trading brokers. And another important thing to note is that now they also support other asset classes, for example, equities, ETFs, etc. And that's great. But still, MT5 is mostly used for Forex trading. And that is what I'm going to focus on in this course. Alright, so this was about MT5. Now let me spend some time about its mother company called MetaTrader Software. And this company, when they started out, created their own programming language called MQL. MetaTrader's language or something like that. And this programming language is very similar to C++. So if you know C++, you can find your way around this programming language as well. But again, this course is going to be about their Python API integration. But let me remind you that most of the ecosystem that this company has built around MetaTrader is still in this programming language, MQL, MetaTrader's language. And just like MetaTrader, they have also been upgrading the version of this programming language. So we discussed how MT4 became MT5. Likewise, MQL4 became MQL5. So they have been making changes to their underlying programming language as well. These are all the resources and tools available to you as a trader. So for example, let's go to their freelance tab. So let's say you are a developer, a Python API developer, or an MQL5 developer. You can sign up as a freelancer. So you can actually make money helping other traders develop trading bots or implement things like technical indicators, etc. And a lot of people do that. A lot of developers do use their freelancing forum. And if you are a trader who want to hire a freelancer, or if you want to hire a developer, so you can post your job here, mentioning how much you're willing to pay and in which programming language you want your solution. So you can see that people have posted jobs here, and they have also specified which programming language they want their solution in. Alright, so this is an important page, and if you want to utilize freelancing options, you can look into this page as well. Just one word of caution: if you are someone who is trying to hire freelancer, just make sure that you check out the reviews of that developer, because there have been some cases of people getting scammed. At the end of the day, this is just like Craigslist. So this is simply a marketplace where buyers and sellers are matched. I don't think that this company does any background verification or anything like that. So you will have to use things like reviews, etc. to ensure that the developer you are hiring is a legitimate one. Alright, so this is important. What else? Let's go to Signals. So in Signals, what developers have done is that they have published their trading bots here. So for example, this person is claiming that he has a bot which has performed really well since the year 2020. And what you can do is that you can buy this bot for $30 per month. And what it will do is that whenever this bot generates signals, your MT5 terminal will take trading action based on that, right? So this is how Signals work. You will see developers posting their bots, and all that you'll have to do is buy it and integrate it with your MT5 terminal. Once again, there have been a number of reviews wherein people said that this claim may not be correct, and a lot of times these bots do not really work. So I do not really recommend buying these bots when you're starting out. The idea is that you should become a developer and you should be able to develop your own trading bots and trading signals. Alright, so that's again something that you may want to look at. Then this forum is very important. And while developing this course, I did utilize this forum as well. I did post some questions pertaining to the Python API, and I got fairly good answers. Alright, so this is a pretty thriving forum where a number of developers who are involved with the MetaTrader ecosystem post questions, answer questions, engage in discussions. So this is a very valuable place if you want to get a better understanding or if you are looking for some technical assistance. Alright, so when you are posting question, you can post it under the general section, or I would recommend that you post it under this section, Expert Advisors and Automated Trading. Again, Expert Advisor is simply the automated strategy implementation, but whenever you do it using the MQL5 language, that is called Expert Advisor. Since we are using Python, we call it Python API integration. Okay, and you can look into other things here as well, articles, code base, very useful information. They also have their VPN system or virtual machine system, but you can only use this if you are using their MQL5 language. With Python, I don't think they support it yet. But don't worry about it. I will explain in this course how you can use a virtual machine for your Python trading system. So don't worry about this right now. This documentation is very important, and you will see that this is where I will keep referring as we progress through the course. And within this documentation page, most of the documentation is dedicated to the MQL5 programming language, which makes sense because MQL5 has been around for a long time and Python is a much newer addition to the repertoire. But for us, this link is the most relevant, Python integration. Just click on this and you can see that this section is much smaller than the one that we saw earlier, right? So you can see with MQL5, you have much larger set of options. With Python, we only have a few. But don't worry, I will show you that using only these, we can build a fairly sophisticated algorithmic trading system. So I hope by now you have fairly good idea about what is MT4, MT5, MQL4, MQL5, how you can use the various parts of the MQL5 ecosystem and things like that. All right. So I think now we have fairly good idea about the MetaTrader ecosystem. So in the next lecture video, we will download MetaTrader 5 terminal and start our Python API integration. Thanks a lot.